What's going on, everybody, and welcome back to yet another video. In today's video, I'm going to be showing you guys how to piece together price action plus volume to identify high probability setups. You guys absolutely loved the last video I did on this, so I figured, hey, we might as well make another. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me, especially because I do put so much time and effort into these videos. But let's go ahead and hop right into it. All right, so when it comes to trading, there's three main things that I like to focus on. The first one is having a level of interest. Where is price going to draw to? So I like to watch areas of support and resistance, supply and demand, Fibonacci, because those all act as areas that price is more than likely going to draw to before seeing some kind of reaction. Now, once we have those levels of interest, we then want to watch the price action. So as you can see, we bounced at this low of day right here on ES with a very nice bullish candlestick. Why did we bounce there? Because SPX hit 5,000, which is a level of interest. So now heading back on over to ES, when we have that level of interest, we want to look for price to draw to it and then look for some kind of confirming price action. So in that case, SPX, that 5,000 was support. From there, we would want to look for bullish price action. Or if price was coming up to a supply zone, which ES hit this morning, we would want to start looking for bearish price action. Now, when I say bullish or bearish price action, what do I mean by that? So bullish price action is going to be any long lower wick, just like this one right here, bullish hammers, bullish engulfings, dragonfly dojis. All of those to me are going to be bullish price action. Now, bearish price action is going to be long upper wicks, bearish hammers, bearish engulfings, gravestone dojis. So when price is drawing to these areas of interest, I want to look for that confirming price action, because if there's no confirming price action, then there's no trade. Now, also on top of that confirming price action, we want to watch the volume. The volume is going to be so important when price is trading at an area of interest. So again, that SPX, it hit 5,000 at 10 o'clock this morning. Well, if we're looking at the ES futures, when SPX hit 5,000, what do we notice? We have that bullish confirmation, very long lower wick, but then also look at that volume right there. That volume is alone telling us that there's so many buy orders coming into the market. So now what do we have? We have the level of interest, we have the confirming price action, and we have the confirming volume to get a long position with your stop loss placed right below this low. And as you can see from there, price ended up rallying from around 50.2325 all the way up to a high of 50.5475. Now, one thing I want you guys to keep in mind is it doesn't necessarily have to be a green candlestick coming down to a bounce level, and it doesn't have to be a red candlestick coming up to a resistance level. So if we head on over to yesterday, SPX bounced at 5,000 yesterday as well. Well, this is a red candlestick, right? Does that mean we should not take the trade? No, because if we actually piece together this volume right here and this red candlestick, we can actually assume that a majority of this volume is actually on the buy side. So again, we're going to pull up SPX and go to it yesterday, and you'll see that it also hit 5,000. So here's SPX yesterday at 11:05, boom, right off of 5,000, rally to the upside. Let's head back on over to ES. Here's yesterday, 11:05, right off 5,000 SPX, and nice rally to the upside. So again, yes, it's red volume. Yes, it's a red candle. However, this to me actually confirms a long entry. And if you start playing around with different time frames, maybe a 15-minute, maybe a 10-minute, you'll see that the 15-minute also gave a perfect confirmation to go long. Look at that long lower wick right there. Look at that very heavy red volume. Sure, it's a red candle. Sure, it's red volume, but long lower wick off a key area with the volume confirming an entry to the upside. And you can see it saw a very beautiful rally off of there. If you are finding value in this video and you would like to learn more about my trading strategy, I highly suggest checking out both of my books on Amazon. My first book, The New Age of Technical Analysis, which is around 450 pages. This book right here is going to teach you everything you need to know from support and resistance, Fibonacci, the moving averages that I use, higher time frame analysis, identifying identifying setups, understanding overall trend, and so much more. So again, the first book, The New Age of Technical Analysis, and then my second book, The New Age of Day Trading, the Ultimate A through Z Trading Guide, which is around 325 pages, goes over my entire day trading strategy, sniper entries, a lot about my Fibonacci retracement trading strategy, futures, time frames, and so much more. So again, make sure you guys check out both of these books. The links will be down in the description. I feel like that's the main thing that a lot of people misinterpret when it comes to volume is they get too focused on the color of the candlestick and the volume, and they just assume, oh, this one side is in control. And then here's two really good examples, one to the downside and one to the upside. Sure, we have a green candlestick right here, but notice this long upper wick right there, and then notice the volume. Just because it's a green candle and green volume does not mean it's all buying. If anything, just piecing together this wick with the volume, that's telling you that a majority of this volume was actually on the sell side. And then from there, you can see price ended up flushing. Now, a little later in the day, we got this 15-minute bullish hammer. Yes, it's red. Yes, it has red volume. But look at one, how small this candle is. Second, this long lower wick right there. And then third, this very heavy volume. This to me is actually showing me that a lot of buy orders got filled in this lower wick. And then from there, you can see that price saw a nice rally to the upside. Let's look at another example right here. This might not look like it could have been a big trade. However, had you entered at the end of that 15-minute, you would have gotten filled around 48.05, which is going to be an 11-point move on ES or around like $1.10 on SPY. But you can see the same thing. We had this push to the upside. Price pulls back on the 15-minute time frame. Notice that huge volume spike right here with this long lower wick. What can we assume? A majority of this volume is actually on the buy side. And had you waited till that close of that 15-minute candle, you would have still been able to catch a nice pop into the high of day. At that point, at least getting off a couple of trims and moving your stop loss up to break even. Worst case scenario, it came back, stopped you out at break even, but you still could have caught a nice move to the upside. And then let's just go ahead. Let's look at one final example. So again, looking at the 15-minute time frame on ES, price had a really strong flush to the downside. However, on this 15-minute candle right here, we had very heavy elevated volume, this very long lower wick right there, which is suggesting to us that a majority of this volume is on the buy side. And because that volume is so elevated, there was an influx of buyers coming in, which confirmed a long entry with a stop below this low. Sure, the candle is red. Sure, it has red volume, but that's why piecing together the price action with the volume is so important. So had you went long at the end of this candle, you would have gotten filled around 47.55.50. By the end of the day, price was all the way up at 47.75.50. So around like a 20-point move to the upside. Anyways, that is going to wrap up this video on how to piece together price action plus volume. Like I said, a lot of you guys enjoyed the last one that I did. So if you guys haven't watched that one, I highly suggest you do. I break down the price action more as well as the volume, but this video was more educational, adding on to what was taught in the previous video. So if you guys want to watch that, that link is going to be down in the description. But as always, if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.